What is your dream car? Perhaps it's a sporty convertible that you can drive in the summer, or maybe it's a four-wheel drive that will take you to fun places. It could even be a minivan that will transport your entire family. I'm Cherry Dale, Vice President of Financial Education at Virginia Credit Union. Regardless of what your dream vehicle is, you need a plan to purchase it. The worst thing you can do is just walk into a dealership off the street with no plan. In this video, we are going to empower you with a plan to navigate the car buying journey with confidence.
The following presentation is brought to you by Virginia Credit Union.
In our video, we will cover the cost of owning a car, the pros and cons of different buying considerations, and how to pay for your car. We often just think of a monthly car payment when we think about the cost of car ownership. This is important. However, there are many more things to consider and budget for. First, you need to understand how much you can actually afford each month. Besides a house, a car can be one of the biggest purchases you will probably make. Before buying a car, know your budget and be aware of additional costs. There are some ongoing additional costs to consider. Let's start with gas. Keep in mind, some vehicles will require that you use premium gas, which will be more costly each time you fill up your tank. You won't have car maintenance all the time, but you want to put a little aside each month so when you need new tires or a car repair, you won't have to go to a credit card. Also, consider registration and car property tax. You definitely need to plan for those costs. As you drive, remember the cost of parking and tolls, which will vary depending on where you travel. Insurance is an important part of owning a car. You can shop around to get the best deal. Liability insurance covers injuries to the people in the other vehicle and all damages to that vehicle and property damage, whereas full coverage insurance covers the damage to both vehicles and injuries to the people in both vehicles. You can set up your car insurance to be paid monthly, semi-annually, or annually. Understand what this cost is so you can make sure to set enough aside in your budget. Here is a handy budget worksheet that you can use to help you manage this process. Feel free to download this and build out your very own monthly budget. Now, what are some buying considerations? Do your research if you are selling or trading in your current vehicle before you purchase a new one. Beware of scams when selling a vehicle and always keep safety in mind. If you're trading in, shop around for different trade-in quotes. Ideally, you want to owe less than what your car is worth. If you owe more, we call that being upside down on your loan. When you're upside down on your loan, it's not a great time to trade in your car. Try waiting a few years or paying off more of your loan before trading it in. Now, there's nothing like the smell of a new car. New cars are great because you can customize your vehicle, and there are usually warranties and lemon laws that will protect you as the consumer. The cons to purchasing a new car is that you will be paying more, and new cars tend to depreciate or lose value quickly in the first few years. As electric cars become more popular, you may be considering going in that direction. It could save you money on gas, and there could be less monthly maintenance. There are also tax credits available. However, electric cars tend to be a bit more expensive for the initial purchase and have a shorter driving range. It takes time to recharge, and repairs can be more costly. So you want to think about your driving habits and needs and weigh all of these things before purchasing. The upfront price of a used car can be more affordable than new or electric cars. Used cars have already depreciated initially. With used cars, you may not know the car's history. Get a Carfax report so you can get a clear picture how the car was maintained and if it was in any accidents. Be prepared to pay for maintenance. Warranty options will vary and may be limited with used cars. Also, consider the color or the interior might not be exactly what you want, since you cannot handpick these things when purchasing a used car. The internet is your friend in this process, whether you're pricing your trade-in or buying used. Kelley Blue Book or J.D. Power are great websites that can help you navigate the average cost of a used car. Now that you have done your research on which car you want, think through how you are going to actually pay for the car. Cash is a great way to pay for a car. Think how great it would be to not have monthly payments. However, the reality is most consumers don't have $10,000 to $30,000 set aside to put toward a car. Maybe you don't have enough cash to pay for the entire car, but you do have enough cash to put down toward the down payment for the car. This will help reduce your monthly loan payment. If you do need a loan to pay for your ride, starting with your credit union or your bank can give you an advantage at the dealership. And of course, Virginia Credit Union is here to help. We recommend you get pre-approved before shopping for a vehicle. That way, you know exactly how much you can spend. You can apply for a pre-approval online or over the phone or in person. Then comes the fun stuff. Time to go shopping. Take your pre-approval letter with you to the dealer so they know you have already secured financing. Here at Virginia Credit Union, a pre-approval is good for 45 days. Once you find your car, we will help you finalize your loan and get you the funds for the purchase of the car. Once you know your pre-approved amount, evaluate the monthly payments at different price points to ensure the car purchase you make fits within your budget. In this example, the car costs $30,000 with a $1,000 down payment and a loan term of 66 months at an 8.5% rate. All of these factors go toward your monthly payment, which would be $552 a month. Keep in mind, the longer you finance a car, the more interest you will be paying for the loan. There are some other additional costs to consider. Gap insurance or guaranteed asset protection is something you should consider for new vehicles or if you are upside down on your loan, meaning you owe more than what the car is worth. Gap insurance is an optional auto insurance coverage that applies if your car is stolen or deemed a total loss. When your loan amount is more than your vehicle is worth, gap insurance covers the difference. For example, if you owe $25,000 on your loan and your car is only worth $20,000, your gap coverage covers the $5,000 gap minus your deductible. Extended warranty plans will probably be offered to you. This will add on to the overall cost of the car, so make sure you understand how much and what it covers. Credit life or disability insurance will cover the cost of your vehicle if you were to die or become disabled. Finally, be aware of dealer fees. Ask them upfront if there are any and how much they are. Leasing a vehicle is also an option. Keep in mind, when you lease a vehicle, it is basically you renting the car for a set amount of time, versus if you get a loan, the car is yours to keep after you pay the loan off. A lease will limit your mileage, and you have to pay for any damages to the car that might occur during the lease. A leased car contract is usually 24 to 36 months, and your monthly payments might be less than if you were to get a loan. If you like to get a new car every few years and drive less frequently, leasing might be a good fit for you. Ultimately, in order to approach car buying with confidence, don't buy more than you can afford. Do your research before you go to the dealer. Know the potential car extras and add-ons that will be offered and sort through which ones you want. Be prepared to walk away if it is not what you want. Remember, the more you plan, the better off you will be. Good luck in your car buying journey.